Hey guys, hope you're doing really well. Look, I just wanted to run through just a few examples on gold, but before I do that, I think it's just really important just to run through what essentially how I look to take trades. I trade the ICC strategy or the concepts. That stands for indication, correction, and continuation. It's a trend-based strategy. And what does that mean? So a trend essentially means there's two types of trends. It can be in an uptrend or a downtrend. So when price is essentially moving up, or when price is moving down. So what consists of an uptrend? Well, it's really simple. We start. So if we're looking for an uptrend in particular, we start with a low and a high in the market. If we're in an uptrend, price then would make a higher low, not breaking previous lows, to then create a higher high, again creating another higher low, so not breaking previous lows, to then create another high, right? So we're consistently moving upwards. We call that an uptrend, or the market is bullish. So just to break down this a little bit further, what is indication, correction, and continuation? So we need the low, the higher low, and the higher high. Once the higher high is formed, that essentially is the indication phase. So what we draw is, if we've got those 4 points drawn, or the market's played out in that formation, we then can draw our level of interest on the previous high. Now I'll draw my I draw my level of interest on the body of the candle rather than the wicks of the candle. I'll show you in an example. So we've created that now. So we've got, those 4 points drawn. So the indication is essentially breaking the previous high to create a higher high. That's the first phase, indication. Price then comes back down below this previous high, right? But not breaking this previous low. That is the correction phase. That is the second phase. Before then breaking back up above this level, which is the previous high, creating the continuation phase. And we're looking to take a buy entry at this level of interest. That's the key, right? So we've got the indication, the correction, and the continuation. So we're buying here and we're taking profits at the higher high. Another key thing to remember is that you want to be drawing these levels or looking for these levels on the 1 hour time frame. And then when we're looking to take our entries, we then scale down to the 15-minute or the 5-minute time frame. We're looking for characteristics of ICC, which is this formation, or characteristics of an uptrend. And I'll show you what I mean in the examples that I'll do after this. So that's an uptrend. A downtrend is essentially the complete reverse. So what does that consist of? We have to have a high in the market. We have to have a low in the market. Again, then we have a lower high. So it's not breaking previous highs. Price then comes back down below this low, creating a lower low because it's lower than this low, right? That's creating our first phase, which is the indication phase. Indication. Price then comes back above this level here, which is our level of interest drawn on the previous low, similar to the uptrend here, right? Price doesn't break this previous lower high. And then we've got the third phase, which plays out, which is the correction phase. Again, we're looking for entries below this level because we know that sellers were strong here. So the likelihood that because we're in a downtrend, the probability of sellers being strong again at this level is very highly probable. And that's why this strategy is so powerful. But it is really powerful primarily based on the structure itself, but and also a big aspect of it is trading on the higher time frames. It's really, really important. Okay, so we'll run through that quickly, and I'll just show you just a few trades on gold this week. Okay. So if we then look at, this was, Tuesday the 4th of November. Based on what we know what an uptrend is and we know what a downtrend is. If you were to look at this, right, this formation here, what would that suggest to you of the type of trend that we're in? It would suggest that we're definitely in a downtrend, because if we go through this together, there's a high here, price then creates a low, right? Then creates it's a lower high to then create a lower low, which is the characteristics of a downtrend, right? So we need, in order for us to draw a level of interest, we need a high, we need a low, we need a lower high, and then a lower low. So at this point in time, I would have drawn my level of interest here, because we've got those four. I'll just show you in this example here. Because we've got the high, we've got the low, we've got the lower high, and we've got the lower low. We can draw our level of interest on the previous low here, or the starting low, right? So keep that in your mind. Perfect. So we've created that. So we've created past this low. This is the indication phase. Price then comes back above this level. It does break this high, but don't get confused. It does break this high, which could suggest that maybe this is an indication. But you have to put the pieces of the puzzle, all the pieces of the puzzle together. You have to realize that the overall trend, when I say the overall trend, we're encompassing parts of the previous day to determine whether we're in an uptrend or a downtrend. This is a high in the market. This is a low in the market. This is a lower high. It didn't break this high, right? Again, price comes back below, doesn't break this low, but it doesn't break this previous high. These are characteristics of a downtrend. So when I'm looking at this, I'm thinking, okay, it's more bearish, meaning the tendency for us to be to move downwards is more probable than us moving in an uptrend. So I've got all of that information now. I've got the first phase, which is the indication. I've got the second phase now, which is the correction. Now what I'm doing is, at this point in time, I'm scaling down to the smaller time frames, the 15-minute and the 5-minute time frame, and then I'm looking at price. So let's do that. I'll scale down to the 15-minute time frame. Okay, so now we're zoomed in. Again, this is the indication. The indication phase is here, phase 1. Phase 2 is the correction, breaks above here. Now we're looking for characteristics of a downtrend on the smaller time frame, the 15-minute time frame. We were on the hour, now we're on the 15. So what is price doing here? Well, let's analyze it. So we can see there's a high in the market, there's a low in the market, there's a lower high in the market. Okay, well, we've already identified, based on that characteristic, we know that price is looking like it's in a downtrend on the smaller time frame. We've already confirmed it on the higher time frame. We're doing the exact same thing on the smaller time frames. We can see price makes a low here. It also makes another lower high, or an equal high. We'll call it an equal high. That's still considered bearish behavior. If it's making equal highs or lower highs, it's bearish behavior. Price then comes back below this level, right? It does break our level of interest, so you could have definitely taken an entry here. Or if you weren't at the charts at this time and you waited another half an hour, you could have entered your trade here, because price made another lower high which is characteristics again of a downtrend. So let's say we did get on this entry here. Let's have a look at our risk to reward. We want a risk to reward of 3-to-1 preferably. If you can get a 2-to-1, that's still good. Don't stress too much over it. So let's say we entered right on that level and we're looking to target the previous low. You can target the low of the wick or the body, whatever your preference is. Let's just say we did that low. And then your stop loss would go preferably above, this high there. Now that's not a good risk to reward, is it? Well, what we could do then is actually look at where is the next previous low. So the next previous low is around there. So that's close to a 2-to-1. Right, so it's not ideal. So probably not the best trade. What time was this? This is 8:15, so I wasn't trading at this time. But it's still definitely a good opportunity to take there. Again, what we're doing for targets, I didn't really mention targets, but what we're looking for is we're looking to target the next swing low if we're in a downtrend. Okay, so that's the most obvious swing low. So 2-to-1 or just bit shy of a 2-to-1, that's still really good. If you wanted to, you could have definitely held your trade longer to get that 3-to-1. So say you could have potentially moved it to here. You would have definitely hit your target. So that's perfect. All right, let's see what we got next. I will scale back to the 60-minute time frame or the 1 hour and see what we got. Okay, so we were here. Let's go to the next day. Let's see if there's anything here. Okay, so I'll move this here, just out of the way for the moment, and we'll just look at this again together. So if we look at this, the start of the day, we've got a low, we've got a high, we've got a small higher low, creating then another higher low, a higher high. Okay, so we know, again, let's look at the uptrend. We've got a low, a high, a higher low, and a higher high. We're looking for that indication, and we've got one. So let's go back. So on the hourly, from the start of the day, this is the start of the day. I'm not sure if you can see these lines. Where these lines start is essentially the start of the day or the agent session. So we've got the low. I'll zoom in just a bit more so you can see it clearly. We've got the low, the high, a small pullback creating a higher low to then create a higher high. Then price comes back below this level. First off, let's figure out how we're going to draw our level of interest. So we've got the low, the high, the higher low, and the higher high. We know that based on those 4 points, we can draw our level of interest, which is going to be on the candle body, right? Perfect. So now we've got our indication, we've got our correction. So at this point in time, we can then scale back down to the smaller time frames, to the 15-minute time frame, and look to target overall highs, which is around either here or here, whichever your preference for risk is. So let's go back to the 15-minute time frame and see what we got. All right. So this was the low of the day. This was the high. This was the lower high, and this was the higher high. So I drew my reference level on the higher time frame. This is transposed on the 15-minute time frame. Around 3 a.m. is the time that I trade. Price has created that indication, created that correction, now is creating the continuation. So if you were entering, you probably would have actually got stopped out. If you were entering your charts or entering your trade at around, 3 a.m. is here, that's New York open, so it created that big push up. Price then came back below this level. If you entered here and say you had your stops, you would have got stopped out. So say we entered here, overall targets here, and your stop loss was below the swing low, you definitely would have got stopped out. But that's fine, because it doesn't mean it's game over or the trade's finished. That doesn't matter. If there's a valid setup later, you can take the valid setup later. Because price breaks below this low, it doesn't invalidate the overall trend. We've identified that on the overall higher time frame that price is in an uptrend, right? So you've got to keep that in the back of your mind. These, breaking of swing lows or swing highs on the smaller time frame really essentially can psych some traders out. But you have to remember in the back of your mind, what is the overall trend? Are we bullish or are we bearish on the higher time frame? And keeping that in mind when we're looking for the next setups. So here, so say you got stopped out there, that's fine. You could have then created or gotten into another trade here. So let's have a look. We take a long position again. When price breaks above, we know that above this level, buyers are strong. And we know that we're in an overall uptrend. So if price breaks again above this level, we know that buyers should take control to then carry price all the way back up. Okay. So say we got in here and our take profit was at the top of that swing. You can put your stops probably below this swing low here or this swing low. Again, you want to try and have a really quite a good risk to reward. This one's a 1 to 2.3, which is okay. Ideally, you want a 3 to 1, but that's fine. That's still perfectly fine. You would have got a little bit almost scared to take out the trade, to come out of the trade, but it did hold. It did hold overall, so that was not a bad setup. Now, the most recent trade was definitely one I can remember because it was yesterday. So let's quickly run through that together. Okay. So that was Thursday and this was Friday. Now, I mentioned earlier, I'll just quickly draw this up with you guys so you can see it. Okay. So zooming in, we're on the 1 hour time frame, which is the chart that we mark our levels from, right? This is the confirming the bias. Are we in an uptrend or are we in a downtrend? So we can see the start of the day. There's a low and there's a high. There's a higher low, then creates a higher high. Perfect. We know from that characteristic, we know that we can draw our level of interest on the previous high right here. Okay. So then what do? We know that we've got the indication phase, which is here. We've got the second phase, which is the correction phase, to then create the continuation phase. Now, it's very interesting here. I'll just show you exactly what happened and what I did, and we can go from there. Okay. Right. So I actually didn't collect the full TP. What I mentioned at the start of the video, perhaps I can't remember if I did or not, is I actually have my take profits at the top of this level, but then also at the halfway point. So between potential entries and full take profits, I've also got my take profit level here at the 50% level. So if I draw another level here, that's about 50%. So what did I do in particular? Okay, so there's the low, there's the high, higher low, higher high, right? That's the, once price breaks above this high, our level of interest, that creates the indication. Price then comes back below our level of interest, right? Zoom in a little bit more. Below the level of interest, price doesn't break this previous high, and there's a really strong looking bullish wick here, right? So what happened? Price came down and then closed here, which is signifying that price is very bullish. And I got an entry right here at this level, and I had take profit level here, and I had a take profit level here. So I actually only got half the trade. So I got an entry here, and about 5 or 6 of my contracts I got out here. Once price got to this level and I saw that it was sort of staggering a little bit, I actually moved my stops, my remaining stops, to just above break even, and I got stopped out for those other 5 or 6 contracts. So overall, I still made, pretty significant amount there, significant amount of ticks. So that was overall quite a good trade. So that was 60, yeah. So overall was about 136, and I got something like 67, or yeah, something around that level, 60 to 70 ticks, which is still amazing. And that was really it for the week. It wasn't excellent. There wasn't as many opportunities during the London session. But if you did trade the New York session, you could have definitely capitalized on this. So again, if we were to, go back to the 60-minute time frame and just see what price is sort of looking like. So that level of that reference level, or that that level of interest, is still very much valid. We've still got that indication. Price made a deeper pullback, obviously, came back and stopped out all these people. But price, if you're just looking at the body itself as well, which is something I look at, price made equal lows here, which still suggests that we're still potentially more bullish than we are bearish. So at about 11 a.m., which is about 2.5 hours after the New York Open, New York Open's 9:30, there was a push back above this level with a lot of acceleration. So we're targeting this high, or potentially even the previous high here. That's what you could have aimed for. So going back to the 15-minute time frame. So it's not as clear. So if it's not clear, try another time frame. So, okay, we can see this is around 11 a.m., right? So what's price doing? There's a high, there's a low. Price creates it's a lower high, so it's not higher. So that could mean, okay, we might be in a downtrend. Price comes back, doesn't break this low. So it's sort of consolidating behavior, right? If price isn't breaking a high and price isn't breaking a low, that signifies to me that we're sort of consolidating a meaning, which means going essentially sideways. We're making a low to then make a high to then making, coming back to a level where there's equal lows. It's just going sideways. It's not making any direction in particular. So then price comes back above this level and then comes back below here, not breaking previous lows. But if we look in detail here, we can see, okay, price makes equal lows. Price breaks above this level here, right? Pulls back slightly before then breaking back above this level. So you definitely could have taken that trade. Let's see, put this one here. Stops probably below this swing low. So we've got this swing low, we've got this swing low, and we've got this swing low. I'd say I always go usually the second swing low. Take profit is there, which is a terrible risk to reward, or there. Realistically, you're probably, if you want a better risk to reward, you're better off actually putting it above, putting the stops below this swing low here. So then you've got, for that overall target, you've got over a 3.7 to 1, which is really, really good. Even to that more conservative level, the previous high, that's still 2.5 to 1, which is excellent. Anyway, guys, I hope that all made sense. It was not the best price action on gold this week. For the last, honestly, probably I would say the last even almost 2 months, it hasn't been easy. Gold's been quite difficult to trade. It's either been going in a crazy upward momentum with no pullbacks, no ICC formations, or it's been consolidating and just being just not cooperating to how we want it. So, but that's just the game. There's next month, potentially, actually probably not next month, because we are coming into December. Next month will be December. That's when the markets will probably slow down quite a lot, because people in the US, which they move the markets, they will be going on holidays. So we'll probably see more sideways momentum until probably the new year. That doesn't mean that we're not going to trade. We're just going to see if there's an opportunity, and if it comes to us, then we can take it. But other than that, we've just got to wait for it. Anyway, guys, I will leave it there. I really hope you enjoyed the video. If you did, please give it a thumbs up. If you like the content and you want to see more of it, I'd very much appreciate you hitting the subscribe button as well. And if you've got any questions, or if you may want to point something out that maybe I missed, feel free to make a comment, and we can discuss that. Thanks for your time, guys. Have a great weekend. See ya.